Good evening, everyone. I hope everybody is doing good and having a good time over the weekend. Today's space is not a planned one, but again, I thought I came across a very good report today. So I thought of having a discussion around that report. So basically, and as a standard disclaimer which we place in the start and end of our session. So this session will be purely educational, and we are not suggesting you to take any financial decisions basis this discussion today. The idea of such discussions is to bring sanity to our mind, like we should have different perspectives in respect of the market, basis which we can see whether the thing being discussed has any relevance as far as my investing process is concerned. If so definitely with a very thoughtful mind that can be inculcated in your process, so that whatever decision you take going forward can be helpful for your financial journeys. So again, the report which I am discussing is from Philip Capital. Again, by no means we endorse or oppose or sharing the views, because this report has been received in public domain. So I've been through, so thought of having a holistic discussion around that. So by no means I'm in endorsing anything or opposing anything. Their views are their independent views, and they have all the right. Of course, the views are being shared by the data points in the report, and which at least give us a perspective that we should always be open in the market to see the things. We should not be blinded by the euphoria or the kind of frenzy going on in the market. And parallel to that, it should not also happen that if somebody has placed some bearish views, or maybe some time or price consolidation may ensue going forward. So that should not be like a sole reason for your decision making, right? So basically, the report is presented by Subodh Gupta ji and Krupali Sompura. So this is dated and the date is today's, and I received this report on a public forum. I mean, that's in public domain. Not sure whether it was like supposed to be shared or not. But again, by no means I'm publicizing anything. So selecting the data points being shared and having a discussion around that. So, so basically, they are talking about the key takeaways in this report, which are mentioned it that in the last 10 years, starting 2014, there has been a bull run in the market, and which has given 3.4x returns in the Nifty, right? So basically, Nifty has rallied from 6,500 to 22,500 levels. However, they observe that there are signs of exhaustion in Nifty, because they feel that we are or the market is in highly overbought, John, as far as longer time frames are concerned. And also they believe that Nifty is presently in a greed cycle, and we may be in the last leg of the rally, after which we can expect or anticipate a healthy price or time correction to play upon the markets. And they have also mentioned that mid caps and small cap indices, they as far as the charting is concerned, they have charted it on quarterly basis. So mid cap and small cap indices are on important channel resistance levels on quarterly chart. So this is one perspective we should be looking at. And again, they believe that the broader market to underperform Nifty in this correction if that happens. And they have also shared their previous I mean, their study basically, rather than saying prediction, because everything has been shared backed by some data. So of course, if this is supposed to be for everyone in the public, so surely you can go through the link which has happened in the past. So basically, they have also plotted Nifty on a 10 basically yearly charts, and as they were showing, so there was a clear breakout on the levels around 6500 in the 2014 time, and since then market has like tremendously done well. So basically it has given returns of the likes of 3.4x, which is 13% CAGR. And so basically they are like that the trend line which was breached during the period 2007 to 2013, so that was clearly breached on the upside. So that was the breakout in the Nifty on yearly charts, and since then it has like given 3.4x returns over the last 10 years. So upon and after that, so as far as the greed part of the cycle is concerned, they have also like plotted this cyclical analysis, right? So wherein the time when the Nifty was 6500 in the 2007 to 13 period. After that, it was like initially the optimism period and then enthusiasm. And currently, the levels which have been shown is in the greed zone. And also, they have done the cyclical analysis basis past evidences for the period 2003 to 2007, in which they have plotted BSE Sensex on quarterly chart. So last time Indian market saw the greed and euphoria cycle was in from June 2003 to December 2007. So which was supposed to be the biggest bull run in the Indian equity markets, wherein BSE Sensex rose from sub 3100 levels to somewhere 20,500 levels. So, as evident, the greed cycle played upon the index, and which was evident in the next quarter fall. So, basically, market had corrected after December 2007. So, the idea here is like they are trying to draw a parallel that similar things are happening at this point in time. On the top of that, like on Nifty again is on a very important resistance. So they have drawn a trend line which is like basically this has been plotted on the basis of quarterly charts. As in the beginning of the report itself, it is mentioned that they have taken the longer time frames. So the Nifty at the levels of 22,000 is trading at an important trend line resistance, and it shows it is in the overbought territory, and basis which we can fairly assume that the upside is limited, and there are high chances that we may see correction from here. And also like they have shown a very good chart wherein the market breadth analysis has been showing, and they also like connected and shown various tops and bottom formed from the past. And like they have also like shared the data of simple moving averages, wherein they believe the tops were formed in the past. So data is shown from January 2015 to current date, and in February they believe that the 26th Feb, which is like last month, 2 weeks ago. So they believe the high made by the Nifty around that time is the potential, or we can say, I mean, the top. And if that happens, we may see correction from here. And as far as like Nifty target projection is concerned, so basically they basis chart alone in the near future, if the correction happens as per the projection, so we may see the Nifty levels of 18,750 to 18,550, which is a key support in the coming days. And if it further corrects, so obviously the next levels could be somewhere 16,000 or so. And also like they have plotted a ratio chart wherein they have compared NSE mid cap 100 to Nifty. So they have like shown the periods from 2001 to 5, and then again from 2013 to 17, and the current one is from 2020 to 24. So basically, in those periods, the Nifty, starting from the July 2001 to January 2005. So during that period, Nifty had appreciated approximately 122%, and the mid cap was three times primarily. So that was 343%, approximately three times. And after that, like the period has been shown is the consolidation period, wherein we do not get much return from the period 5 to again 2013. So there were up and downs in the market again, but broadly, if you see the chart of the past, you'll believe that that was a consolidation kind of thing. So the next chart trend line which has been shown is from October 2013 to October 2017, wherein Nifty had appreciated 67%, and parallelly the mid cap was almost few basis points lesser than the 3x level of Nifty. And then we see a sharp correction in 2018, and again, and then Corona happened. So from Corona onwards, like if you take the data from April 2020 to say January this year, the Nifty had given returns of almost 115%, and the mid cap returns are approximately 234%. So again, they believe that basis the parallel drawn as it has happened in the past. So there are signs that, and these are all again the quarterly chart which has been like plotted for this comparison of an NSE mid cap 100 to Nifty chart. And also they have drawn a multi-year channel. So again, the current levels of and in this Nifty NSE mid cap 100 to Nifty ratio chart is again the current levels are again the near to the multi-year channel top, and which is going to be a strong resistance. So they believe that again this also proves that there is likelihood that we may see underperformance going forward. And this is again a sign of exhaustion on chart. And they have also plotted the similar chart ratio chart for Nifty small cap 100 to Nifty similar periods. And so they have also shown the periods wherein the Nifty and this small cap and Nifty ratio chart wherein the downturn was happening. So firstly, like I'll be telling about the period April 2004 to 2007, wherein Nifty was approximately 3x, and the mid cap is 637, so almost 2x of the Nifty returns. Whereas for the period like January 2008 to January 2001, so Nifty had corrected approximately 36%, whereas the correction in the mid cap was somewhere near 60. And similarly, in the period October 2013 to October 2017 period, so Nifty had appreciated 67%, whereas mid cap appreciation was approximately somewhere less than 3x of the Nifty. And then came the pain period, which is from January 2018 to January 2020, wherein Nifty had corrected 50%, and the small caps had corrected. So there is a correction. I mean, this one is for small caps. So I think they have mistyped mid cap instead of the small caps. So the correction in the small caps was somewhere 54%, which was more than 3x. So that was the pain period. Most of the participant which was there in the market during that time know how hard that period was. And again, from April 2020 to January 2024, the Nifty has appreciated approximately 115%, whereas the small cap has given 249% returns. So this is and again, on the basis of quarterly chart, again, the channel being drawn, it also shows that it is near to the channel resistance. And of course, when we see some correction in, say, the Nifty or the mid caps, so small caps also face the brunt for same. So next in line is like they have plotted mid cap 100 on quarterly charts, wherein NSE mid cap 100 levels is 46,685, and it's again at the if important channel resistance and the the overbought John basically. So we may see like from here basis their analysis, they see that they can see levels of 38,000 to 40,100 on the mid cap 100 index. And similarly, the chart has been plotted for small cap 100, and this is again a quarterly chart. So currently, the levels are somewhere around 14,846, and they believe that the overbought oscillator which they have plotted on the chart, they believe that we are heading towards 11,400 to 10,800 levels. And we have seen in last couple of weeks the kind of correction which has happened in the small caps and mid caps has been very painful. And if the levels being shared in this report, if that happens to be happening going forward, so that we can fairly assume how much of more pain could be possible in the small and mid cap segments. But again, having said that, we always say that the approach should be bottoms up, and if you are getting you are identifying good companies, so there should not be any need to worry about the broader markets, because if your horizon is 3 to 5 years or maybe long, then definitely any good corrections will be the bargains or good opportunities for you to add. But again, those who are into the swing trading or like trading for shorter period of time, so definitely in such volatile times they need to be very cautious. And also like in continuation, the paradox of intermarket linkages, which has been shown by a picture in the report. So basically they have as far as equities are concerned, the Dow Jones Industrial Average has rallied approximately 35% in last 6 quarters. Even the bond yields, US 10-year yields, has rallied 72% in 6 quarters. And for currencies also, the dollar index being consolidating at an important support after rally. Same is with the crypto. The Bitcoin has rallied 162% in the last 6 months. And when it comes to commodities, the gold, so it has given a breakout of 42 months of consolidation. So they have made a remark that does this rally in Bitcoin and gold indicate a safe haven play in the markets? The money is moving from the markets to maybe gold or other asset classes. So with each asset class in a bullish trajectory and inter-market correlations being breached, they believe that the question here is how long can this irrational exuberation last? And in the concluding remark, they have shown that it is believed that could be an intermediate topping out of Nifty, with present rally being the last leg of this cycle. And there is a possibility of sharp correction in Nifty, which can take the index towards 1800, 750 to 18550 levels. And in the worst case, market can also go north of 16,000 to 15,500 levels. And as far as like this was on the end of index correction or maybe price correction, but they also believe that if time wise, the correction can also last for a minimum of 3 quarters, which could be like the end of this year, and maximum it can also be till the end of December next year. So they fairly saying that assuming that we are in a multi-decade bull run, Still, this correction is absolutely necessary to cool down the oscillators. So, as we always say, that corrections are healthy, but how much of that is healthy is individual choice, because the way we are placing our investment is very important. And again, this is one side of the view, but by calling for a correction in this euphoric market, they believe they are taking a trend reversal call in the medium term. But again, this is all a probabilistic thing, and if and they believe that if their analysis doesn't go through well, then Nifty can also see the levels of 27,000 to 30 levels. However, any bull market to take place, then obviously the mid caps and the small caps have to perform the large caps, right? Which means broader market will have to move up, say 30-40% from current levels if that happens. And but having said that, they believe that the chances of happening, I mean, the market appreciating 30-40% from here are comparatively less, and all the parameters, all the charts which has been shared, they believe have an indication that there could be a temporary uh, price and temporary correction which may happen, and they have all the reasons basis what the chart says. But again, the other side to it is people believe that the recent rally which has happened was backed by the good earnings, and if the results in the coming quarters also come out to be good results, then obviously there is no way wherein we believe that the market may not do good. So I mean, if we try to bring some sanity to this discussion, so we should be like focusing more on cutting down or on our so we will be cutting down more on our losers or less conviction bets, and on the top of which, and if something which has a great margin of safety in our old investment, so we should continue to ride those. And again, if any market correction is supporting, I mean, giving you an opportunity to add to your existing ideas which you believe are I mean, good on the aspect of valuation as far as the growth trajectory going forward. So definitely you will be staying in the market. But again, if the horizon is short, then of course you have to take your decisions accordingly. But the longer run, the India growth story that remains intact. I do not see anything happening. I mean, as far as the market always needs some triggers or reasons for correction to happen. But again, we do not see anything which is very obscenely happening, which can create an atmosphere wherein we believe that the doomsday is near. So it is part of the market activity. We get both the sides. You'll find the people who are very bullish, you'll find people who are bearish, and there are a group of people who are, which we believe are sane people, who always prefer to listen to both the sides, but their final decisions are always maintained that if there are horizons, their study, their investments are good to go. They should not rush for anything or buying or selling basis such reports. And once again, this report is their view, and I have shared it for a purpose of discussion rather than like endorsing any view or opposing any view. We have all the right to discuss the things which are available in public domain, but yes, if there is something which is relevant as far as your investment process is concerned, so definitely that should be given a red, and basis that you may come to a decision that how you should be placing yourself, at least for the incremental investments, right? And again, as we were discussing in the previous spaces also, so there are various pockets which went into a territory of what we say, obscene valuations are slowly and gradually coming back to sanity in the recent correction. And if more of correction happens going forward, so we believe you will be able to find the same companies which you were hunting 2 weeks ago at a much good price. And obviously, if you look for margin of safety, so it would be more available in the times of volatility or market uncertainty. So with that, I rest my opening note. I also see Ravi, Sachinji, Prajesh, and others who are our regular participants. So if they have anything to say, so they should join as a speaker, and we can continue with the conversation. And apart from that, if anyone from the audience also has anything to say or maybe quickly ask any questions, so we'll be happy to address them. And meanwhile, a small request. I believe those who are joining us on regular basis, they are already a subscriber to the YouTube channel. So I'll be uploading all the conversations, and also we'll be starting with the Zoom recorded video formats wherein the guest can also present their thesis, right? So that will be coming soon. Hopefully, that you will appreciate more, because in the past, and even if we talk of today's discussion, so I discussed the report, but there is no way wherein I can show that report over here. But again, I'm totally planning on recording video formats, and they'll be uploaded on the YouTube going forward. So if you are yet to subscribe to the channel, I will sincerely request you to do so, because we also need the motivation to come again and spend our time with you, wherein we try to bring the best in our capacity. And this has become a virtuous cycle wherein the guest, the kind of questions the audience ask, has been very rewarding for majority of the participants. And we firmly believe that we do not endorse anything which we ourselves don't do. And again, whosoever comes to this forum comes for educational purposes only. And whosoever is, we do not endorse their services or maybe anything at their hand. But again, we in our capacity try our best that we keep the best filter to bring the best people along. And their intention is to do their social responsibility by sharing whatever they know. And being the part of this market, it is always good to keep ourselves updated on all the happenings. And of course, we have to avoid the market noise and stick to the quality information which is of our importance. And I always say, when we keep in markets, the only aim on our part should be to refine our process, and that should be done in a better manner if we have our clarity of thoughts. And since the attention span has reduced a lot these days, you should be focusing more on few ideas rather than running after each and every idea. So, Ravi Bhai, Brajesh, Sachinji, I see only three familiar faces who come as a speaker. So, if you guys are free, so definitely we can continue the conversation. Otherwise, the report has been discussed by me, and I believe that would be of some help for some of the participants. And since like the report was on the basis of charts, so chart is a representation of transactions which happens. So chart also signifies broader trends. So we should not hesitate in learning those aspects also. But as we always say, the decision should not be primarily on the basis of that alone, right? Because moving in and out of market will lose you the top days wherein the best returns in the market are made. So with this note, I request if you have any questions, so we can take your questions. Otherwise, so we shall close for the day, and you should like. So I think there aren't any questions or maybe anyone. Okay, arrogant guys asking, is anybody speaking? Yes, yeah, I'm speaking for last half an hour, so I believe I was audible to majority of the participants. So Brajesh, can you confirm by any smiley? Am I audible to everyone? So thanks, guys. This was a quick, short session on a Sunday evening, and I believe that it was of help to you guys. So okay, Sachinji has. Hi, sir. How are you?
Yeah, I'm fine. Princely, you were perfectly audible, and it was, in my opinion, what I wanted to say that if we go through each and every bull and bear market, every phase is somewhat different from the earlier phase. You cannot correlate each and every, what happened in small and mid cap pre-COVID, I think 18-19 period, or earlier also during subprime crisis, market crashed and it went into bear phase. Every phase has some different, distinct characteristics. So uh, going forward, there appears to be some euphoria in certain sectors. There was some euphoria, and there are uh, कुछ तो गिरावट आई ही है स्मॉल एंड मिड कैप सेक्टर स्पेस में, लेकिन बेस्ड ऑन अर्निंग्स जो अच्छी कंपनियां हैं दे विल कंटिन्यू टू परफॉर्म आई थिंक, because the government's policy are also very proactive towards small and mid cap sector, small companies, SMEs and MSMEs. And if you remember well, in 2019, probably if I'm not wrong, the government reduced the corporate tax rate to 25%, and after that, the earnings visibility started coming in and market turned around. So right now, I don't see anything happening negatively on the government policy front. And if the earnings keep on pouring, I don't see a long-term correction happening. This is my perception of the market right now.
Right, sir. Thank you. And very rightly said, as far as earnings are coming good, we have no reasons to, be bearish on the companies we are invested in. But again, there could be some,
Yes,
not some, but
in those companies where earning visibility is not there, and just people are playing some momentary gain, or the valuation at which you have entered that particular company are high, there may be some a little bit cause of concern. But by and large, good companies with good fundamentals, I don't see any reason of concern.
right, sir. We also believe that the
This is
pockets wherein value is available and earnings are coming and growth is visible. So definitely the smart money will definitely be moving to those pockets. So we should be like working on identifying the areas wherein there is still value available, especially in times when markets are uncertain and we see corrections. So there are high chances that the majority of the funds and the smart money move towards pockets wherein they find the growth visibility as well as valuation comfort. And obviously when smart money chases something, so those pocket do well. So should be similar in the sense we should be like doing an analysis of our portfolio companies, and we believe where the companies where you believe the initial thesis when you bought is still intact and the things are coming as per the guidance of the management. And so definitely you should be staying with them. And as we also discuss and we also like agree to that fact that money is made by staying in the market rather than jumping from here and there. So of course that is and one question is on the cement sector. So I believe even in the last discussions which we had various discussion wherein cement sector was discussed. So as on date, the demand is very promising and there isn't any oversupply in this sector. So there is a high probability that this sector will do good, and the kind of push we are seeing in the infra development and the real estate. So I believe being an ancillary to these two big sectors where the focus of the government and even the private players is very much, so I do not see there would be any issues. But again, which companies you would be picking and at what valuation, that you have to take a call on. And again, this sector is cyclical, so you should also be like planning your investment accordingly, that till the time the things are good, when there would be oversupply or maybe the demand will get skewed, you should be running out of those companies or those investments. Let me
in
see.
my
Yes, sir,
uh,
please.
in my opinion, I mean, I prefer to play the cyclicals when there is deep pessimism in that sector. This gives a good period of time to accumulate the desired quantity and also to study the companies and the sector in a good detail. Uh, so as far as I see, I have time and again I have pointed out that right now I see chemicals. I find comfort in of valuation and certain there are certain pockets and unfortunately I could not attend the space that you had a few days ago. So I got a hand on the space today morning in from YouTube and listened to it. So the right time to ride those sectors which are in deep pessimism, that is the best way to play. Otherwise, when most of the people start entering that sector, right, like railways or defense sector or public sector banks, or in present day scenario, I think they have run a lot, and valuation wise, the comfort will not be there. And by the time it start going down, the slide is so fast that you don't get time to get out of the company. This is my opinion. So it is better to play in deep pessimism time. You can, as it is rightly said, that trying to time the market is quite difficult. I think for a layman like me, it is quite difficult to time the market that okay, the next quarter chemicals will start going up, so enter it right now, 1 or 2 months earlier.
Right, sir. And I say one point which should be part to everybody's checklist is like how much of the narratives or the stories about a company is already in price, right? Because if you do not have a cushion of margin of safety, so however good the sector or the company be, and there could be a possibility then in the buoyant market it can go way beyond uh, the I mean as far as the valuations are concerned. But again, there has to be a cushion of margin of safety which can like make you money in the longer run. So we are also joined by Ravi. So Ravi, you have been part of this spaces for a while. You have been listening. So any thoughts around it? And I'm not sure whether you have been through that Philip Capital report yet. But again, it was more about they have charted the Nifty, the BSE, Sensex, and even the mid cap 100 and the small cap 100, and quarterly and yearly charts, and they were drawing parallel to the past, and they believe that the biggest bull run, I mean not the biggest, the big bull run which started from 2014 onwards is almost like approaching 10 years, and there could be a possibility that we may see more correction here. And although like our past discussion, we always say that our approach should be like bottoms up, everything else can wait, and if we are able to choose the right companies at right valuation, and time is our friend, so we'll definitely create good money in the market. Yeah, Ravi.
So hi Prince भाई, कैसे हो आप? Like I've been थोड़ा सा caught up, so I was not able to attend, that spaces जो आपने conduct करा उस दिन, like जिस दिन market crack किया था काफी. And yeah, like जैसा सचिन सर ने कहा, वो मेरे को भी वो उसका YouTube recording सुनना है अभी. But दो चीजें हैं which I would want to quote here. See, first of all, end of bull run जो heading है आज का. See, sir, my perspective of bull run or a bear market is not based on like that market ऊपर जा रहा है नीचे जा रहा है. Basically, bull run is an era of expanding PE, and bear market is actually an era of contracting PE. That is key. Even if a company is posting good numbers, its PE won't expand that much proportionately in a bear market. And in a bull market, even when the results are not that good or great, the company is not punished very severely. And this, perception of PE largely depends upon macroeconomic factors, like, overall fund flow of capital into that economy, overall capex being done in that economy. And when I talk about capex, it is not only on about physical infrastructure. I'm also talking about the digital and the human infrastructure aspect of the things. So those things are there. So if we take a collective view of all these aspects, we any one of us, like, it won't need an MN economics degree from Delhi school or something. We can see that all these factors are like, pretty much positive for India's case. Yes, market is volatile. Its very nature, its very existence is itself volatile. And in fact, we all know, by our experience, that it is this volatility only which creates, pockets of opportunity on either sides of the extremes. That thing is there. Then further going into that Philip Capital report, like I haven't read the report word to word, but yeah, I mean, obviously it was such a, like, such a dropping a bomb like moment that many people have, like, opined their like view on the report, yeah, paraphrase the report. And yeah, I mean, they say that, like, with a lot of data and stuff, they have pointed out that the decadal bull run, which started from 2014, it is, slowly now, the markets are getting tired. It is coming to an end in 2024 or something like that. But then there are some counterpoints, to that whatever data they have quoted, which I personally think. See, first of all, people say that India has been a decadal bull market. I completely disagree to that. If we look at India's valuation in 2013 December, it was all-time low in the entire, global market community, if you see. Okay, so as a result of which a fair part of this so-called bull run has gone into bringing India to the level of fair valuation. In fact, this so-called decadal bull run, I think 70 to 80% of that bull run has gone to bringing India into the fair valuation part. Second, in the past 10 years, whatever policy measures, right from starting a business to resolving a business, ease of doing business, then like infrastructure spending, then debottlenecking of the entire supply chains. These aspects have been put into the picture, so they create a huge space for further upside. Okay, so pointing out this, that that a bull run, that the decadal bull run or something like that is about to end. Who said that a bull run, even in in its most limited definition, who said that bull run is only restricted to a decade? India as an economy, as a demography, as the level of income where we are today, India ideally should have like a consistent growth period of more than 3 decades of 8% plus GDP growth rate, which in past China, Singapore, or even South Korea, all these economies which have actually transformed themselves in front of us only, they have done this in the past. So who said that our bull run or our performance has to be only of a decade? So the Prince Bhai, as you know that the speciality of market is that event occurs first and then explanation flows in. And then obviously institutions also need to be in going on conversation whatever is happening in the market, in the economy as of day. So I think yes, that report is good, a good reckoner of various data sets for a decent perspective, but it cannot be the only perspective or a deciding factor on which one can do anything, let alone take a decision. So that's my take on that report. And as far as end of bull run is concerned, like you and Sachin sir already have pointed out, see, no matter what the where the market is going, there is always and always and always a bull run somewhere in the market. You need to find where it is. Period. And yes, like you need to also avoid where the excesses have occurred. For example, let's talk about SME index only. In 1 year, the entire index is going up by 20 times. Okay. So, I mean, it has to be an intelligent investor's call in order to be selective. That that selectivity is what defines an active investor or a trader, right? Or else you can very easily park your money in mutual fund or PMSs or whatever it be. So you have to be selective in your approach. You have to be very clear with your objective and perspectives. You have to be very thoughtful of what you are getting into, because only when these things are there, then that very much talked about and very cherished troika of vision, courage, and patience factor in together, and ultimately learning gives way to earning. So that's my take, Prince Bhai, on this one.
Yeah, Ravi, very rightly pointed out, and we totally agree to the facts. And as you rightly said, that there would always be excesses in the market, and there would always be pockets which are ignored, where we have extreme to moderate pessimism. So definitely, it is up to an individual where he or she wants to play. And everybody, every phase of market provide you opportunities. The only moot point is how you are able to find out or identify those opportunities. And if you are blindly going by say of anyone, be it on the social media or TV or whatever it be, then of course there is no process in place, and sooner or later you will burn your fingers, because the market is a place wherein it rewards people who have the good the needed study, the required patience, and on the top of that, like the belief that we as a country are going to do good, and of course it all depends on the time horizon. So Sarvesh has also joined. So Sarvesh, any question on your part? He got dropped. Okay, I'll come to that. So I think Manish has also joined. So Manish would, okay, he also got. So Kaushik, you are here as a speaker. So anything you want to ask or say?
No, no, Prince. Nothing. I'm just listening. It was good, like listening over here. So that's all.
Okay, great. Thank you. So Brajesh, anything on your part?
Yeah, good evening, Prince. Actually, I got some telephone calls in between, so not able to listen fully, but
Sure. No
partly
issues. Yeah,
what
please go ahead.
Ravikant Bhai said is totally I agree with him. And about this end of bull run, your title is there, and the report of Philip Capital I have not read, but as my investing philosophy remains with the value investing. So for any technical analysis or anything that I don't know, I don't follow those things in my investing. And whenever there is a bear market, it will happen, and nobody can predict it, whether technically or fundamentally. And it will just come and take everybody with the size. So maybe possible, and होता है हर बुल मार्केट के बाद एक जिसे वेदर चेंज होता है वैसे बियर मार्केट का भी एक फेस आता है और उसको जान जाना या प्रिडिक्ट करने से कुछ बहुत कुछ आपको जानकारी होना भी एक थोड़ा बुकिश नॉलेज होता है लेकिन उसका थ्योरेटिकली ठीक है लेकिन प्रैक्टिकली आपको कोई बहुत बड़ा उससे कोई फायदा नहीं होता है क्योंकि वंस यू इन्वेस्ट इन ए कंपनी और आप वहाँ कंपनी के कॉन कॉल्स में जाते हैं आप मैनेजमेंट को सुनते हैं कंपनी के फ्यूचर ग्रोथ का होता है उसको निफ्टी के डायरेक्शन से अलाइन करना और फिर इन्वेस्टेड रहना इट्स अ वेरी डिफिकल्ट थिंग फॉर एग्जांपल फॉर मी जैसे मैं शिपिंग और शिप बिल्डिंग पे आई वाज वेरी बुलिश और पीएसयू स्टॉक्स पे एक टाइम पे मैं काफी बुलिश था ड्यू टू वैल्यूएशंस सो इन बिटवीन कई बार करेक्शन आए कई बार काफी नॉइज थी और लास्ट वीक भी पूरा जो है ड्यू टू एडवांस टैक्स ऑब्लिगेशन और सब एक स्ट्रेस टेस्ट था मार्केट का लेकिन 2 दिन में पर्टिकुलर मेरा पोर्टफोलियो जितना घटा था जैसे मैं बिलीव नहीं करता हूँ नोशनल प्रॉफिट लॉस में अनटिल अनलेस आप कोई स्टॉक जब तक लेते या बेचते नहीं है या पोर्टफोलियो से कोई स्क्रिप्ट आपकी बिकती नहीं है तब तक जो भी डेली वैल्यूएशन चेक करना कोई समझदारी की बात नहीं है लेकिन सामने दिखता है तो एक दिखता है कि जिस तरीके से वापस से मार्केट जितना फास्ट रिकवर हुआ है 2 दिन में तो ऑलमोस्ट मेरा पोर्टफोलियो तो वहीं आ गया बिकॉज ऑफ शिपिंग एंड शिप बिल्डिंग आई एम हेवीली इन्वेस्टेड तो इंडिविजुअल लेवल पे है और एंड ऑफ बुल मार्केट तो जब होगा कभी जब तक यूएस मार्केट को जितना ट्रैक करते हैं यूएस मार्केट के डायरेक्शंस देखते हैं कोई ऊपर से कोई 1000-2000 पॉइंट एक साथ डाउ में घट जाए या कोई ऐसा कोई इवेंट आ जाए तो फिर सोच सकते हैं कि ये एंड ऑफ बुल मार्केट है अदरवाइज लिक्विडिटी की कोई प्रॉब्लम नहीं है 15 मार्च को एडवांस टैक्स ऑब्लिगेशन भी इजीली क्लियर हो गया एडवांस टैक्स के नंबर भी जो अभी आए हैं 15% अप हैं इसका मतलब ये क्वार्टर्स की अर्निंग भी बेटर रहेंगी और यूजुअली मार्च का जो एडवांस जीएसटी कलेक्शन होता है वो हाईएस्ट होता है इट में टच अराउंड 1.9 to 2 लाख करोड़ इन अप्रैल यानी जो मार्च का फिगर आएगा तो उन सब चीज को देखते हुए थोड़ा सा इलेक्शन की वजह से गवर्नमेंट ने डीजल के जो प्राइस 2 रुपए भी कम किए हैं उससे कुछ ना कुछ इन्फ्लेशन ईज होगी तो इन्फ्लेशन ईज होगी तो वापस इंडिया एज ए डिमांड कंज्यूमर डिमांड ओरिएंटेड इकोनॉमी तो वापस से इकोनॉमी रिवाइव करेगी तो डिमांड मेंटेन रहेगी फिर वापस मैरिज सीजन आएगा इलेक्शन है इलेक्शंस में भी काफी पैसा खर्च होता है लोगों की पॉकेट्स में पैसा जाएगा स्पेंडिंग फिर बढ़ेगी तो मार्च और आने वाला जून का क्वार्टर दोनों बहुत अच्छे रहना चाहिए मेरे हिसाब से पर्टिकुलरली कंज्यूमर गुड्स में और सब चीजों में क्योंकि इलेक्शंस में काफी पॉलिटिकल पार्टीज और सब काफी पैसा लोअर लेवल पे सबको मालूम है क्या होता है। और तो वो जब भी पैसा रोटेशन में या सर्कुलेशन में आता है तो उससे इकोनॉमी बूस्ट होती है। और इलेक्शन के रिजल्ट्स भी वेरी मच प्रिडिक्टेड है, इट्स नंबर गेम। मेजोरिटी किसकी आनी है, क्या होना है, सब कुछ मालूम है। कोई बहुत बड़ा, कोई महीने 2 महीने में ऐसा कोई इवेंट हो जाए, क्या कोई बात हो जाए तो दिखता नहीं, अदरवाइज तो देर आर फेयर चांसेस कि मोदी गवर्नमेंट विल रिटर्न टू द पावर विथ लॉट ऑफ ईज। इतना इजी इलेक्शन मैंने अभी तक अपनी लाइफ में नहीं देखा है जो इतना इजीली प्रिडिक्टेबल हो। तो इसलिए एंड ऑफ द बुल रन के साथ में मैं नहीं हूँ, और वैसे भी वो ऑन द टेक्निकल ग्राउंड है तो मैं उसको इतना बिलीव नहीं करता हूँ। बाकी
Right.
सबका अपना अपना ओपिनियन है, और डिफरेंट डिफरेंस ऑफ ओपिनियन मेक्स द मार्केट। तो किसी का
100%.
व्यू है, कोई प्रॉब्लम नहीं है।
100%. And I
इंडिया
very well
में
agree. Very well agree to the points you mentioned about the kind of spending we see in the elections and the upcoming data and the even the advanced text data figures and the anticipated GST collection. So definitely, and that will be that is going to be promising. So we do not see anything majorly impacting all the industries and companies on the earnings thing. So on that front, definitely we are poised for a strong quarters going forward. And again, we had a similar from Ishtiaq, who was asking about elections and any levels. So levels, I do not see, Ishtiaq ji, ki there would be any correlation with the election. And as we have discussed this election thing a lot of times previously as well, so we firmly believe as on date, and it appears that in this election, uh, there is going to be a stable government. We do not see any hurdles as on date. But if something changes dramatically and there is a sudden, change of government, or maybe the number of seats not capable of forming a government, in those scenarios, market might find some reason to give short-term volatility. But again, the growth trajectory of our nation appears to be streamlined, and I do not see if there is government A or B coming to power will materially change the things. So we are joined by Sunil ji also. So Sunil, any question you can unmute and ask, and then we'll take views from our speakers. Sunil ji, बताएं. Sunil, you are on mute. हाँ,
Yeah, no,
बोलिए.
sir, I don't have any question. I'm just listening. Thank you.
Okay. So there is one person, Shiva. Shiva is saying 2004 be easily predictable tha. People have Pasha for not learning their lesson and not get into prediction business. So Shiva, you may be right to an extent, but the scenario today and the scenario in 2004 by any means are not comparable. But again, you have all the liberty to say whatever you want to say in your personal capacity. So Ravi, you have any comments to make? I mean, if we have to like have a conversation on drawing parallel to the 2004 time and this election again, we are not saying anything in favor or oppose in any particular political company, political party, but again, for the sake of discussion alone. Yeah, Ravi.
So, like, as Shiva is, yes, as you also pointed, sir, that, like, Shiva is actually right in his personal liberty, and we all can have and are free to have opinions. That is definitely there. But if we look at the landscape and if we look at the, overall, I mean, see, we all know the problem is not the biggest difference between 2004 and 2024 is the opposition. Back in the day in 2004, the opposition was like pretty much united and charged up. for doing something. Here that's not the case. And secondly, like, even on the work front, I mean the government has pushed a lot. In fact, one of the reasons we are so much bullish on overall economic landscape is primarily because of the things which have been pushed, with whether it be in terms of, like, policy measures, statutory measures, regulatory measures, even, like, foreign trade deals. So capex, all this has been put in place by the, like, current government very properly. And some extremely contentious issues which have been part and parcel of the overall Indian psyche and history, they have been handled very delicately. So yeah, again, just like anything else in life, there is always an element of certainty, because there is a as they say, that there is 7 seas difference between the cup and the lips. So anything can happen. But yeah, again, I agree with sir also that largely, uh, the political risk aspect associated to overall movement of the markets also is in a way, to a certain extent, like, factored in. And for the rest of any uncertainty or certainty or anomaly, like, let's enjoy the election session, how things unfold, how they go by. Because I personally believe that, like, the general elections are one big entertainment episode for Indian populace, which comes every 5 years, because people enjoy thoroughly the elections. I've seen them.
I totally agree to this part. Like whenever election approach, wherever you commute, wherever you meet people, so and you always find people discussing about politics, and be it any candidate in person or maybe the majority participants. And I believe, like, see, when it comes to the assembly, state assembly elections, there are different set of I mean, what we say, a different set of issues for the states. There, the things are different. But the majority of the conversation we see these days, so when it comes to the central elections, so majority of the participants believe that whatever, I mean, of course, by no means any endorsement of any government, and liking or not liking any political party's individual choice, and we respect everybody's views. But people believe that the things are falling in place, and India has grown on many fronts and poised for a very structural growth trajectory from here. And as far as Shiva pointed out, for the 2004 period, something which comes to my mind is, even the government had changed in the year 2004, but again, what the market has seen from 2004 to 2007 8 was I mean, known to everybody.
Prince bhai,
So
can I add one thing here?
yeah, please.
So just one, like, a divergent view here. See, many a times I come across this like point of view that, like, irrespective of any government, like, the markets and the economy keeps performing and all stuff like that. I mean, that's a, like, I would say, a shallow take on things. Reason being, there is a very strong correlation between, the political will or the political economy of things and the overall performance of the economy. Right throughout history, you can see any country which has evolved very sharply on its economic base has been completely propelled and supported by your government. Even, the epitome or temple of capitalism, USA. It was the US government which, took upon itself to build in the entire infrastructure in order to provide people with jobs, basic food, and etc. in the wake of World War I, World War II period. So, like, political risk is something which needs to be understood very clearly. And as far as 2004 goes, see, the previous regime's history is completely divided in two different terms. Yes, we all know that there was a thunderous support by the markets, which are the most rational and secular place, in my opinion, to the first part of the government. But then the second half became a travesty in itself. And the primary reason is, like, something which is beyond the scope of this discussion. So, like, the political risk aspect cannot be dismissed. And, this blind, politically correct view that it doesn't matter that which government is there at the helm, India will continue to grow, is in fact, more than a bit misplaced.
Right, Ravi. So yes, I mean, we have enough of this on the election thing. So let me see if there are any more relevant questions. And right, cement sector we have covered. And so Voracious is saying, I think irrespective of the political party which runs government, India is at a decent growth trajectory, should not impact. Yes, that is what we were saying. Yeah. But again, there is one thing, obviously, we have seen in the past also. So the stable government with majority have performed comparatively better as far as decision making is concerned. So on that front, there is little segregation, but otherwise. So Nagaraju Parvatha is asking, is the banking sector a value play now? So, Ravi, banking is your domain, so would appreciate if you like throw some light on that.
Yeah, I mean, Prince Bhai, even that like nearly all the banks, barring one or two private banks, nearly all of them have a very strong, robust uh, uh, balance sheets, and they are very well capitalized also. And at the same time, the recent action, in fact, very proactive action by RBI, has also sent ripples across the entire banking and NBFC sector, that they cannot go for unwarranted and extremely risky growth. So that has helped, to settle down the froth quite a bit. And just after that episode, we had a market wide correction. So a lot of froth, which had built into that particular space, has settled down now. And yes, there are very good quality names which look very promising, both in the public as well as the private sector domain, which look definitely very promising for coming 2 to 3 years.
Right, Ravi, and I totally agree to this view. And also, like in the past, also, whenever we have spoken to our guests who have been closely monitoring this space, so they believe that this space has a lot of value at this point in time, also. So before coming to Manoj, we are also joined by Harsh. So Harsh, quickly, can you run us through like what the chart says, be it the Nifty or the small or mid cap index, and then we go to Manoj.
Okay, thanks, Vince. Right. So I don't think like there is any risk of end of bull run in terms of everything. I mean, in terms of charts, in terms of fundamentals, in terms of political uh, things we spoke. So yes, definitely, the market wants a stable uh, government, and if there is a change in government, there is a risk in market. But the probability of change in government is almost like 1%. I mean, or even less. I mean, everybody has discounted the results already. The market has already discounted the results, and probability of change in government is very, very, very low. Uh, that does not seem to be a risk to the market. Market has already known what is the government coming to be. So I would comment on that part. Rest, technically, if I strictly speak based on my Elliott wave reading, we are in the middle of bull market, and there are corrections in bull market. Corrections always come in bull market, and corrections are very fast, and they are deep also. So we are going through a correction, and yes, we will see more selling. I'm expecting some more selling, but this is not end of bull market. Uh, in terms of technicals, we don't have any signals of ending of bull market. In terms of fundamentals, there are no signals of like we are ending a bull market. And fundamentals are changing. We have now seen a robust GDP numbers, and I think if my technical readings are correct, we are going to see improved fundamentals. So basically, as per my Elliott wave readings, we are in a third wave of bull market. Third wave of bull market is where there is a robust growth in market, in economy. We see change in fundamentals. We see growth in markets. We see spendings growing, capex, and the government is, if there is a again third term, government is planning a robust growth in a lot of sectors, renewable energy, and in terms of the projects they are planning, railways. So I think if there is a stable government, there will be a growth, and we are in a super growth phase right now in terms of fundamentals, and in terms of my wave readings, we are in the middle of third wave, and we are going to see much more highs from here. Yes, there will be a correction. We are going through a correction, and uh, in short term, we have risk of correcting, and there will be, because we were too much overbought. There was too much froth in small and mid caps, definitely, and it had to correct. So means since Jan, I was of the view that we should do some profit booking because markets are overbought, and I have held that view till now, and it is now coming true. We are correcting, so we will see corrections for furthermore few more days, maybe till end of March, and I see buying emerging again from April, and the rally will resume. The bull market is not ending. Also, in terms of participation, so in a bull market or in a third wave of bull market, what we call on in terms of Elliott wave, there is a increased participation from overall public. So we are seeing that the number of, in terms of SIPs, the record SIPs we have seen, there is a large participation from public. Public is recognizing that yes, we are in bull market, and in terms of technicals, we had a bear market in 2021-22. I know technical, in terms of purely technical terms, you may not call it a bear market because the index did not correct 20%. But that is a typical bookish explanation of the things what happened after October 2021 till March 2023. We were going sideways. The index was going sideways, but during that period, a couple of stocks failed 40-50%. We already seen a bear market during that period. And bear market doesn't come in 2 years. Every 2 years, there is no bear market. So we just started a bull market in March 2023, and a bull market cycle usually goes for 18, 20 months or 25 months. So we are nowhere in end of bull market. We are in middle of bull market. Next 12, 15 months, we are still going to see more highs coming. But yes, we are going through a correction, and we should stay on sideline until the correction gets over. Maybe in end of March or maybe first week of April, when we see prices stabilizing and there is a slowdown in fall, maybe prices again starting to get higher, then we can start to pick, choosing again opportunities. When there is a cool off in terms of overbought indicators, what I say RSI, we use RSI. So there was a extreme overbought readings in RSI on monthly charts. So when there is a extreme overbought reading in RSI on monthly chart, market will correct. There is no doubt on that, and it's happening. So let the RSI cool off, let the indicators cool off, let market get some correction, and then we will see again market going higher from April. That's my view, and I will stick to it because there are currently there are no signs. Now, if we think uh, if there is an end of bull market, and so where the money will go? See, money has to go somewhere. If money is coming out of stocks, then it will go to bonds and dollar. So is the money going to bonds right now? Is the money going to dollar? There is no sign as of now. So we will observe if money is going to bond market, if money is going to dollar. Then I would like to again reassess and see what's happening in market, what levels we are now. Right now we are at 22,000. There are a cluster of supports at 21,500, 21,000 level, and I think up to 21,000 to 20,800. That's a very good support. Unless and until we break those supports, there won't be any major change in market trend. It's just a correction. So we'll watch the readings and the price action on charts, and then again reassess. We'll assess what's happening in dollar index DXY, what's happening in US bond market, yields. Are the yields going to crash? So people say rising yields are bad for markets. It depends. Why? What is the reason for rising yields? Uh, and what is the reason for rise in inflation? If the inflation is caused by demand, if there is demand and then prices are rising, then it's bullish for market. If inflation is caused by uh, poor supply, lack of supply, then definitely it's not good for market. So as of now, we'll watch how the market behaves, where the money is moving. If money is moving to safe assets like bonds or and dollar, then definitely I would like to reassess. But unless and until that's happening, I think this is just a correction and we have to see much more highs. That's my view.
Thanks, Harsh. Really helpful. So, Ravi, anything more on your part to discuss, or shall we wrap up for the day? Questions, I think we have taken.
I think Prince Bhai, it was a wholesome discussion, and I've like added, and other speakers have added lot of needed dimensions which are needed to guide one in such tumultuous markets. So I think we can wrap it up if all the questions have been taken up.
Yes, right. So thanks everyone for chipping in on a Sunday evening, and I believe that we are able to add some value to you guys, and definitely look forward to your support and participation. And on the top of that, if there is any feedback on the sessions, on the kind of content we are sharing, or someone you want us to host, so definitely you can connect us. Maybe you can DM me or through an email, or you can comment on the videos on YouTube, so that the feedback loop should continue. So in that way we can communicate more, and as and when we communicate, there are high chances that we try to bring synergy to our work. And again, I would say, if you are yet to connect over my Twitter handle and the Twitter handle of our guest Ravi, Brajesh, and Harsh. So definitely, if you find that we can add some value to you, you guys can connect. And if you are yet to follow my YouTube channel, I would sincerely request you to have a look. Definitely, you'll enjoy the kind of content being shared and the quality of guest. So with that note, I take everybody's leave, and certainly will come again with more sessions. And I would sincerely ask you for a feedback. And if you're liking our work, so it would be great if you can tag us and let us know, so that we also know that we are doing some work. Thank you so much. Good night. Take care.